So let's summarize. What does cash flow from investing activities tells us? It actually tells us how much the company is putting back into its business. See, for a company to grow in its sales and its profitability and operating income, it needs to invest back into operating assets. And that is why I bifurcated cash flow statements of investing activities into operating and non operating assets. As we see from all over the world, cash flow statements follow the same format. Investment in operating assets, that is investment in basically your expansion of factories, property, plant, equipment, etc., and investments in financial assets like mutual funds, government securities, the marketable securities. In fact, if you want to know how much your company is growing, one of the sign of growing companies is what? It is that the capex, remember the capital expenditure in investing activities, will exceed the depreciation the company charges in income statement. Let me repeat. The capex in investing will increase the depreciation. What I mean by that? Look at Alphabet depreciation or Google depreciation. It was $11 billion. How much the Google has invested for its growth? That is $24 billion. So, and $24 billion in organic growth by purchase of property and equipment and $2.6 additional dollars in acquisitions. So Google has almost invested around $27 billion as compared to $11 billion of depreciation. So that means that Google is putting money for its growth in the future. The same thing can be said about Amazon. Amazon's depreciation was around $25 billion during the year. And the amount of money which has been put in for the purchase of property and equipment, it was more than $40 billion. Even after netting the sales, that comes out to be $35 billion. After that, they have purchased additional acquisitions, made additional acquisitions in cash. That is $2.3 billion. That means almost $38 billion have been used for growth of the company, which can be seen in cash flow from investing. And the depreciation part was only $25 billion. That is, Amazon has effectively put additional $13 billion of its cash flow for its future growth. That means Amazon and Apple are both putting money for the future growth of the company and will accordingly should grow as they are putting money for their future. So, since the depreciation represents the wear and tear of old machines, of property, plant and equipment, and it effectively serves as proxy of the amount needed to replace these existing machines. And if the capex exceeds this amount, then it means the company is putting money in increasing its operating capabilities. So this tells you how much cash is being put for the future capacity of the business. So you see how intuitive and how different cash flow statement is as compared to all other financial statements. When you look at the balance sheet, you don't get the scale of what is actually being done in the company. Of course, it is possible that your company is earning money, but where is that money being used? Is that money is being used just for just for putting the money as investments in marketable securities, or it's actually being used to grow the company further, to compound its growth further? You can see that by looking at both operating and investing activities.